What is going on, investors? Back again. Welcome back to the Investor Channel. Today I'm going to do a new video series that I hope to upload every weekend. That's the Investor Channel Q&A. This is episode number 1. If you have a question you would like for me to answer on next week's episode, leave me a question or a comment down below. I'd love to get to it. Today I have just a couple, and I'll try to take as many as I possibly can in future episodes. So let's just get right into it. So this one comes from Diamond Investing. He says, I know these videos are supposed to be a brief overview of stock financials, but I would love to see a video where you show us more things you look into when investing in a company. Do you look at management team, moat, competitors, etc.? Because I know for sure you can't be buying just off financial statements alone, and that's true. I'm currently in the process of building a long-term portfolio, and this would help a ton. So, hey, thanks for the question. It's actually a great one. It's probably one we should talk about a little bit more, especially when I go through the videos, like maybe an individual video on Tesla or a Nike or an Apple or something like that. So I'm going to walk you through kind of the 4 things that I look for that are not financials, okay? I think if you have these 4 things, it tends to lead to good financials. Good financials tend to be a byproduct of the things I'll describe here. So they kind of go hand in hand. So the first thing I look for is something I call gold medal winning stock. So what I want you to think about is in the opening ceremonies of the Olympics, all these athletes are coming in, and I'm always amazed like how many athletes there actually are at the Olympics. But if you personally were able to go down into that stadium and handpick 4 or 5 athletes that you wanted to invest in because you thought that they were going to win the gold medal, they were going to be the big superstars of the Olympic, well, it probably wouldn't be that hard of a decision, right? Okay, you'd probably, if it was the Summer Olympics, you'd probably go find the men's basketball team. You'd probably, from the United States, you'd probably go find the United States women's gymnastic team. You'd probably go find maybe the men's swimming team from the United States. Okay, obviously I'm biased here in the United States. I know what our athletes do. So that being said, you would go down on that field and pick the athletes that you knew were likely to win a gold medal, that had a chance. Because let's face it, a lot of those athletes down there don't have a chance to win a gold medal. And I kind of think of that like the stock market. There are plenty of tickers. There are hundreds and thousands and tens of thousands of companies that you could potentially invest in. But in my opinion, only a handful actually have a chance to win a gold medal inside the industry they're in. So what do I mean by gold medal inside their industry? So I'm talking about maybe like a Nike. So inside the athletic apparel, kind of the sponsored professional athletic apparel, you know, how many other companies out there are actually capable of competing with Nike? We've seen plenty of companies throughout the years try to compete with them, from a Reebok to Adidas to Under Armour, and most, if not all, have come up short. And so Nike, in my opinion, is a gold medal winning stock inside its sector. Now, the other one, obviously, maybe like an Apple. Okay, when you think about the smartphone, you think about especially the $1,000, the $800 smartphone, the high-end smartphone. How many other companies, how many other manufacturers are out there successfully competing against it? Really, we're only talking about maybe 1, possibly 2 other companies. And inside a market where everybody has a cell phone, well, take a look. Apple is certainly a gold medal. And then maybe when you look at the EV space, the electric vehicle space, you look at someone like Tesla, where it's like, yes, does Tesla have lots of competitors? Sure they do. But Tesla, at least at the current time, is by far and away the gold medal winning stock inside the EV sector, because they have the battery technology, they have the distribution, they have all the cars out on the road, they have a charging station and kind of network and things like that. So that's what I would focus on first, is especially a long-term portfolio. Okay, trading and shorter term stuff, none of this really matters, but his specific question was a long-term portfolio, one where when I think long-term, I'm thinking 10 years, maybe 20 years, maybe even 30 years. You want to make sure the companies you're buying today are still winning gold medals 20 or 30 years from now. Not the second place companies, not the third place companies. To use the Nike example, look at a chart of Under Armour or look at a chart of some of these other companies and it's not quite as good because that company simply did not win the gold medal inside that. Second thing I look for is leadership. One of my sayings when friends ask me, how do I find good stocks? And I say, well, don't worry too much about finding good stocks. Look for good leadership. And I think, we can definitely point to certain companies, especially the companies that I just pointed out, Apple, Tesla, Nike. You look across the board of those companies, and some of those outside of Tesla, some of those companies have gone through 2, maybe even 3 leadership changes, but they continue to move on and continue to produce good products and have a great performing stock. And so leadership, especially at the CEO, the executive level, is very important. And Tesla is probably one of the best examples because Elon Musk is kind of this, mythical cult creature almost. He tweets a little bit, he's idolized almost inside just from a perspective of being a leader, being a CEO, being a founder, being an inventor. And so that definitely has some aspects of driving a stock. We saw that as well when Steve Jobs was alive with Apple. And certainly Nike and plenty of other companies have experienced good leadership. Then when you look at the other side, how bad leadership, there are lots. I don't want to maybe single out some stocks, but maybe like IBM or Sears or some of these companies that used to be doing really well and used to be big, gigantic companies. Well, they fell on hard times on leadership and the brand deteriorated. Now, speaking of brand is another thing I really like. I love investing in great brands. Take a look at Apple. Okay, Apple not only is a great company, has great products, but probably over and above all of that, they have an absolutely phenomenal brand, okay? Apple can stick that Apple logo on just about anything and charge twice as much as the next closest competitor. I love stuff like that. Nike is the exact same way. Tesla is probably in a similar boat. If you think about maybe a non-public company, maybe some of the higher end retail brands, maybe like a Rolex. Think about like a Rolex watch. Okay, a Rolex watch is nice, yes, okay? They make very nice watches, but compared to maybe some other brands, they might not be as nice. But because of that Rolex and that Rolex crown on there, Rolex can charge thousands and thousands of dollars for a stainless steel watch that, typically on other brands would not sell for quite as much. So I love brand that ties right into leadership and gold medal winning sectors as well. Then finally, you look for vertical integration, especially in newer companies, okay? Not necessarily maybe mature companies, although we are seeing it with Apple. We saw it if you watched my video that I posted on Apple where I analyzed the financials of the company. Apple is starting to vertically integrate their service business. So that's iCloud, that's their new subscription, their music subscription, all their little services that they charge you $10 a month or so for. They're starting to vertically integrate that into the phone purchase. And so I like that. Another company that's probably, in my opinion, the pinnacle example of vertical integration is Amazon. If you think about it, 20 some odd years ago, Amazon.com started as selling books. Well, what they realized is if they wanted a full catalog of products, they had to integrate third-party sellers in there, similar to what like an eBay had done. And so Amazon.com turned into having third-party sellers come on there. And then what Amazon figured out is their website was crashing during Black Friday and Cyber Monday. And so they needed to build all this server capacity onto Amazon.com just to support the site for like a few weeks period of time. And so they did that. And then they realized they had all this extra server capacity. So they started to sell that off to other companies and other websites, and that spawned really their most profitable business unit, at least right now, AWS, their cloud computing service, and that really launched the whole cloud computing business. And then finally, you move on a little bit further down the road. Amazon's had a ton of integrations, vertical integrations and integrations within their business model, but probably the newest one that a lot of us can think of is their delivery service. And so Amazon realized, well, FedEx and UPS, they cannot possibly meet all their needs as an e-commerce supplier. those companies simply cannot meet Amazon's demand. So what did Amazon have to do? They had to go get their own trucks and their own distribution network. Now, most of your package, or a large percentage of them, actually get delivered by Amazon themselves. And so you better believe maybe a year from now, maybe 2 years from now, I've actually heard predictions that it's coming sooner rather than later, that eventually you're going to be able to mail your own packages through Amazon's delivery network. So wouldn't that be kind of interesting as well? So they're basically going to turn into a UPS and a FedEx themselves as well. So hopefully that helped a little bit. Those are the 4 things I look for. Gold medal winning sectors, companies that are just, when you think of cell phones, you think Apple. When you think of sneakers, you think of Nike. When you think of electric vehicles, you think of Tesla. To me, that's gold medal winning, okay? You don't think of Ford or GM when you think of EVs. Those are silver and bronze medal type winning companies in that sector. So I would stick to the gold medal winning companies, at least for a long-term portfolio. You look for leadership as well, okay? And leadership can come in many forms. There's lots of leadership, and leadership can fall on hard times as well. So you just want to keep up on that. Make sure that the leadership is doing a good job. Typically, you can look at the financials. Bad financials is typically an example of bad leadership. Good financials, good stewardship of the financials is typically a good sign of leadership. Then you're looking for brand, okay? Think of all the great brands out there, because brand can overcome bad leadership. It can overcome bad times. It can even overcome a lot of things, okay? A Nike logo slapped on just about anything can sell for more, no matter who the CEO of Nike is and no matter what the situation is, inside the economy or anything like that. So I love brand. That's another thing I would definitely look for. And then finally, the last piece, especially with newer companies, if it's a company without a large track record, maybe like a Tesla. I know they've been around a while, but they're still a relatively young company. There might be other companies out there that you can use as an example, but one that can vertically integrate. So they start with one product, or they start in one area, and then that allows them to branch out into other areas. Then you don't have to worry so much about margins and things like that, because think about Amazon. The complaint is always, oh, well, Amazon.com, the actual selling of the products, doesn't make Amazon a lot of money. Well, wait a second. If they never started Amazon.com, they would have never gotten to AWS. And so it's all integrated into one piece. And so that's why I look for vertical integration, because it also allows for a company to grow into an evaluation. So if a company has a lofty valuation, you're buying it early on, it has some hype behind it, well, you better hope that they really grow into a large company, and by vertically integrating, they're going to be able to do that. So hopefully I helped answer that question. Moving on, Fabian asks, can you analyze Bitcoin? Sure, I would love to. And I don't know if he means from a technical perspective or if he means from a more of a fundamental perspective. I will tell you this. From a fundamental perspective, there's probably lots of other information, a lot more experts out there on Bitcoin. I will tell you, I have been following Bitcoin since it was $2 or $3 a share. One of the things I like to do, not so much now in my free time, but in my single days when I was younger, I would play a little bit of online poker. I would do a little sports betting. And quite frankly, Bitcoin was actually kind of early adopted inside of those industries. And so I've actually been following Bitcoin since it was $2 or $3. Now, obviously, I wish I would have started buying it then. I didn't start buying Bitcoin until I think it was about $200 or $300. So it was already kind of made a big move up into, a very noticeable asset at that time. So personally, however much, let's think about a portfolio construction. Okay, I don't know off the top of my head, I have some Bitcoin sitting in Coinbase. I have some Bitcoin sitting on Robinhood. I would guess it's probably a few $1,000s worth. What percentage of that is my net worth? We're talking single digit percentage. So depending on where you sit with Bitcoin, quite frankly, I know people that have done really well by having a huge portfolio of Bitcoin. You just want to, understand it's a very volatile asset. So I've brought up, this is like a Bitcoin future chart, and I've got a weekly view on it. And so you can see, man, this thing was down down at 6,000, close to 5,000, and it's peaked all the way up, all the way back up to like 15,000. I mean, this thing swings around wildly. So if you want to trade Bitcoin, I actually think it's probably, if you want to be like a trader, it's probably one of the cooler things to trade. And quite frankly, it trades in a relatively, I don't want to say predictable, but it trades in a pretty nice range to where, yes, you can definitely make some money. Now, from a longer term perspective, I'm just holding Bitcoin the same way I'm holding some gold, whether it's inside of a portfolio or physical gold. I just look at it as an asset class that I want to be a part of. And Bitcoin will Bitcoin be the means buying and selling stuff with Bitcoin? I don't know, okay? Because the Bitcoin network and the way Bitcoin works is probably not set up for that, okay? To have everybody or a large percentage of the America or the world really to use Bitcoin as that means of an exchange. But Bitcoin will always, going back to kind of our fundamental stuff, Bitcoin's a gold medal winner. Leadership you can kind of throw out, but from a brand recognition, Bitcoin will always, in my opinion, be the Rolex or the Nike or the Apple of the cryptocurrency space. Obviously, tons of other cryptocurrencies have come forth, but Bitcoin will always be the one that has the brand name recognition, in my opinion. So it's the one, if you want to hold it for a period of time, I think that's great. We're also seeing PayPal. PayPal announced this week, I even saw it inside my PayPal account, that eventually you're going to be able to have Bitcoin in there. I don't know exactly how that's going to work. Now, from a chart perspective, we're actually sitting right at an interesting level. The stock made a huge like roundabout move here, topped out right in this range. We're right at, let's call it 1350 here. We even topped it here. The stock had a nice drop. It kind of topped up and then started making this downward move. Came up here, stalled out, came back down. Now we looped up again. So what's going to happen here? We're actually at an interesting spot because does Bitcoin pop up into this upper range? Because here's I believe these are some of our highs that Bitcoin saw, this, back up into the 20,000 range. Okay, so can Bitcoin burst through? It's really at a line in the sand, in my opinion. So it's an interesting spot for Bitcoin, something I will definitely be looking at. I tend to buy it when it makes these big red candles. Look, we're in a nice, strong uptrend here. We'll see what happens at this level. That's an interesting spot for Bitcoin. It's something that I would watch over the next few days and weeks to come. This is a weekly chart, so think about each of these bars is a 5-day trading period, and maybe 7 days with Bitcoin. I'm not exactly sure, but you just want to keep that in mind, that we're at a critical level, and we'll see where this one goes. So next question. Zach Miller asks, how do you know how to draw those straight lines and predict stock movement? Can you do a video about it? Sure. Tell you what, the place I learned it, I had no idea about how to draw trend lines in these horizontal trend lines. This is more like a vertical trend line. I think we can all understand these. You kind of pick a low point and you try to cross it through as many points as possible. The more points that it crosses through, the stronger indication that is a trend, in my opinion. Now, the horizontal trend lines, at least on this Bitcoin part, you're trying to look for where the stock likes to pivot, in my opinion. And so I'm going to jump over to the Coca-Cola segment here, and let's take a look at Coca-Cola. So here's the Coca-Cola chart. I'm on a daily view. This is back up in March. We made these March lows here, and we've really gone sideways, and that's why I picked Coca-Cola, because we have a lot of other stocks that's kind of like gone straight up and gapped up and those kind of things. A little harder to draw those lines when the stock's moving around violently. Now, what I see here with Coca-Cola, take out these March lows. I'm going to zoom in a little bit. We'll get past March, and we'll kind of come in here and just look at the last couple months. And so what I see here are some levels here where Coca-Cola's made some tops right here. You see these levels right here, and you see them back up in here. So I'm just going to draw a line here, and we'll draw them across here. And what you can do is, what I like to do is just start with one line and see how that looks to you. And what you can do is drop it down in here. Now, on a chart, you have the wicks, these little thin lines where price actually closed was a thicker red spot here. And, all these have these little wicks. And so what I like to do with my trend lines is I like to rest them on the solid parts of the candle. And you see here, this trend line's kind of interesting because you see here, we topped out over here. This was this line here, this 40, call it about $49 here with Coca-Cola, was kind of a line in the sand here. Yes, the stock ticked up, but it was fake outs. Okay. This stock ticking up above this line was a fake out. And then it came back down here, almost retested this line, came back down here. Take a look, retested, popped up above, but then once it broke down below this line, it's solidly below, came back close to it, came back up here, touched it perfectly here, came back down, touched it perfectly here. And then finally, once we broke solid green candle up, we go up above. But then what do you expect on the way down? To stop right here at this $49 level. And again, we actually did that for a very several trading days in a row here. We were right on this level. And then take a look, popped up above it. And then what happened? Solid red candle through our trend line. And this is, in a lot of ways, technically a broken trend now. And now we're solidly below that. So what would you want to do? Now you might want to say, well, maybe you want to short Coca-Cola. We broke this trend line. And so now how low is it going to go? Take a look. We've got some bottoms here. We've got a little bit of a bottoming here. We've got some bottoming on these candles. You could draw one in right about here. Now, none of this is, I wouldn't say any of this is scientific. It's probably more art than science, but it can definitely give you ideas where you can buy stocks or where stocks might be pivoting, where they might be pulling back into. So personally, I see here, this is right about $47. Again, it acted as support here. Not so much here, a little bit. The stock kind of danced around it here. That's not that bad. Same here. It kind of danced around it here, and then once we popped, but here's a pretty solid point here. We didn't quite get down to this level. You could probably, if you wanted to tighten this up, you could push it up into here because then you've hit these lows here. You've kind of topped out here. You hit a couple tops here, here. This is what I would call this second line, not like a firm line in the sand. This upper one here at 49 was definitely, in my opinion, when you have these really clean, looks into price hit 49 and sellers stepped in, you're looking now where are buyers going to step in. And I actually think down in this range, you see here, we had buyers step in. When the stock sold off, when did buyers step in? Right here at, we'll call this $44. Same thing here. Stock made a nice run, then sold off. Where did buyers step in? Right here at 44. Same thing. The stock made a kind of a fake out rally, dropped again, but where did the buyer step in here? Right at 44. And then once this stock kind of took off, then it's up there. So that's how there's no right or wrong way to do this. Now I'll draw you one at the top. The one here at the top, take a look. We've got these candles hanging out here and there's this gap right here. And so another way to kind of think about these is kind of look for these gaps. So watch, I'm going to draw a line right along that gap. Take a look at what that does. Okay. So we right at the bottom of this gap. So obviously the stock started selling off and then it was like, oh no, we're really selling it off. So we created this gap right here. We'll take a look right at the bottom of this gap or top of this gap, or whichever way you look at it. Take a look. The price topped out here. It topped out here, topped out here. So I would say 51, we'll call that 51.50 is a key level for Coca-Cola stock. Because we started our gap here, the stock has tested that level 3 times just over the last, we'll call that month or so, and the stock has gotten rejected and sellers stepped in at this level, okay? And then obviously, when sellers stepped in at this level, where did the stock come down to? That 49 level. And then once the stock broke the 49 level, where are the buyers going to step in? I think it's a little less clear. I don't think you've got like this beautiful trend line, but I think if you come in here, we're actually right on that level. And so and here's the questions you need to ask yourself. Okay, there is no guarantee at all Coca-Cola is going to stop here. This is why when I do my videos where we talk about a little bit of technical analysis, we couple it with fundamental analysis. So if the fundamentals of Coke are looking good and you like the company, you think things are going to turn around, maybe the even macro environment, the economy is going to turn around, well, this could be a decent level. And that's why we always talk about if I had $1,000 to buy Coca-Cola stock, well, here's one level where I would buy it. And so out of that 1,000, I might do 100 or two here and just wait, because if this stock bounces up, it'll probably hit 49 and it might come back down. It might stall out at 49, could do another 100 at 49 because maybe everything's looking better. But the other thing that could happen is we could come down here to 47 and this stock could break. Okay, so I'd rather only do about $100 here and wait to see, because if this stock breaks 47, look, I have down here at 44 as my kind of line in the sand. And so this is why I like doing upper channel levels and bottom channel levels, because it really gives you an idea when the stock is down here at 44, I'd probably be way more aggressive buying, Coca-Cola. Like, for example, if I just stumbled across this stock, I'd be like, well, this 44 level is a great level, because you see here, we bottomed out here, we bottomed out here, bottomed out here. And those are on the heels of pretty big, strong downtrends. Okay. These are both pretty strong downtrends in these stocks. For them to pick that price 2 separate times, actually 3 separate times, that's a pretty strong level. This is where I would come in. If I had $1,000 in Coke, I'd probably unload half of it, maybe even 60-70% of it down in here, with the confidence where, yes, this stock could definitely go lower. It could potentially retest these lows down here at 38, but I like the odds of it bouncing here and probably trending back up into the mid 40s. So there we go. Hopefully you guys enjoyed that question and answer. Again, if you have a question you would like for me to answer here next week on the Q&A episode, leave me a question below. I'd love to hear from you, and we'll get to as many as we possibly can next week. Thanks for tuning in. We'll see you guys next week. Good luck with your investments.